Hey everybody, Mattie here with Altcoin Buzz. Happy Saturday to you. Hope you're having a great weekend so far and that you will have a great weekend. We're looking at fewer stories today. Certainly, there's been a lot of news lately, all kinds of project updates and various things. We're going to kind of focus in a little bit and we're going to look at one of two big studies that have come out. So I think I alluded to this the other day. There was a CoinGecko 2018 Q3 cryptocurrency report. We're going to save this one actually because we're really going to go granular today, but we will look at this. This is going to be the second installment in our report series. So you can expect my analysis, my interpretation of the CoinGecko report soon. We're actually going to look as promised today at the Morgan Stanley cryptocurrency report that Luke spoke about the other day. So he wrote about it in this article. Morgan Stanley Bitcoin is the new institutional investment class. So this is of course based on a fairly comprehensive report that was issued. We're going to take a look at this article briefly and then dig right into the report. So a few years ago, writes Luke, every investment bank labeled Bitcoin as a scam and Ponzi scheme. We've all seen what's happened since then, right? In 2018, the perspectives seem to have changed. Today, Morgan Stanley, a New York-based multinational investment bank and financial services firm, released a cryptocurrency report. And the conclusion of that report, more new institutional investors are interested in the crypto and blockchain space. So the report highlights the fact that the sentiment around Bitcoin is in fact changing and will most definitely change even more over the upcoming years. And the authors believe that Bitcoin, defined in the report as, quote, digital cash, will eventually become a legitimate asset class. And because of this, an increasing number of investors have full confidence in the potential of cryptocurrency. So Morgan Stanley's research division tells us that an increasing number of traditional financial institutions have lately entered the crypto space or are about to enter, and some of them are doing so in pretty big ways. And some of the well-known recent examples, as Luke points out, are of course Fidelity, Goldman Sachs, and ICE. And there are others, of course. The report is pretty balanced and it does point out some of the challenges that we're facing right now in the crypto sector. There's regulatory uncertainty, the slow progress in the development of custodial solutions, and not enough large financial institutions involved in the nascent ecosystem. I am of the opinion that that's the kind of thing that can change really on a dime, right? In terms of the long-term play, I think once there is that critical mass of people that are hopefully not FOMOing, but once they're legitimately ready to enter the space, once you have a critical mass of them and we pass a certain threshold, rather, I think it's going to happen pretty quickly. So let's take a look now at the report itself. So this was released just a couple of days ago. Morgan Stanley report, the Bitcoin thesis is rapidly morphing. Cryptos highly correlated. So this is a pretty extensive report. It's a 50-page document detailing the current state of cryptocurrencies. The sections include stablecoins, ICOs, problems with Bitcoin, institutional investment, energy consumption, regulation, and blockchain. And finally, just in terms of the overview here, Morgan Stanley thinks that institutional interest is increasing, but there are still several problems with the industry as a whole. So Morgan Stanley is also a veteran in this space. This is hardly the first such report it puts out. They've released about 15 research reports, with the oldest one dating back actually to May 2017 on the subject of cryptocurrency. The report points out that these are kind of the changing narratives that we've seen in the cryptocurrency space. Originally, there was a digital cash narrative that kind of subsided in 2016. Incumbent financial system, antidote, replacement payment system, new fundraising and capital allocation mechanisms. Store of value has been relatively new, starting in like 2015, between 2015 and 2017, I suppose. Disruption, advantage, refuge for depreciating currency, new institutional investment class. That seems to be the one that we're knee deep in right now at the moment, as you have all of these behind the scenes things moving around, discussions of ETFs, legitimization through the Security and Exchange Commission. Of course, I think that's fair to summarize the current state of affairs as the potentially new institutional investment class, all kinds of custody offerings, of course, being hatched behind the scenes. And there's a very strong correlation that was uncovered between the price of cryptocurrencies and the trading volume. And here's a very interesting stat in terms of Bitcoin trading. 52% is traded against crypto pairs, while 48% is traded against fiat pairs. So that's a pretty even split, actually. I'm a little bit surprised at that. Another notable point here that's been quantified, and we've talked about it before, is that really the volatility of Bitcoin has fallen to the lowest level since the start of 2017, while the cross-correlation with other cryptocurrencies stays high. The report goes on to cover a section on stablecoins. They also address ICOs, which, let's be honest, are kind of falling out of fashion right now. They're not really in vogue anymore. But you can take a look at some of the metrics here, all kinds of capital statistics available for you there. This is very interesting. ICOs versus startups. And if you look at the failure rate, so fail within the first year, 25% of startups fail within the first year. Almost 3 times that figure is the standard with ICOs. Fail over a 10-year period, that's really where this has been totally untested. We're charting new waters, right? As much as, or I should say, as many as 3/4 of startups will fail within the first 10 years. I don't know, guys. I mean, what do you think the success rate of some of these ICOs are over the next decade or so? If you invest in some of these ICOs in maybe 2016, 17, maybe even 2018, don't get me wrong, there are a lot of gems out there, but given that we're in the Wild West, unfortunately, there have been a lot of hustlers infiltrating this space, and for many, that's been their vehicle of choice, the ICO. The report addresses the fact that there's really been a mixed reaction to Bitcoin futures, so you can take a look at the institutions that clear Bitcoin futures currently, and then you have others that straight up either don't or are still reviewing that possibility. Institutional investment is a very interesting part of the report. Morgan Stanley thinks that the current investment thesis is the institutional development, and I think that's really at the crux of things. That's what's going to get things moving one way or the other. Morgan Stanley cites Crypto Fund Research, which is tracking cryptocurrency fund AUM. In July 2016, the crypto fund AUM was $380 million, while 2 years later, the AUM is $6.11 billion. You can take a look here at the breakdown of those funds, how they're structured, and where they're structured in terms of their national jurisdictions. So a pretty good quantitative summary, I have to say. They're backing up their research with quite a bit of data here, and that's, to me, that's the strongest way to present an argument. Of course, statistics can be manipulated, they can be interpreted differently, but so far this has been fair and balanced, I would say. Let me know if you guys have a different opinion, but I'm impressed with it so far because they're pointing out not only the pros, but the negatives associated with this entire space. The report does cover the topic of energy consumption, which is a contentious one. Because it's only expected to rise. And there are a lot of doomsday kind of naysayers that talk about how, the Bitcoin energy consumption is going to destroy the world. Look, I disagree with that because trees do not grow to the sky. There's a limit to everything, and the free market is going to balance things back out. Nonetheless, it is something to discuss, and there are some criticisms to be issued and to be leveled because currently Bitcoin's electricity consumption is enough to power about 3 to 4 million US homes. So that is a lot. Then we have a very nice breakdown here of all the banks that are currently testing blockchain, and that goes across Europe, North America, and Asia. All kinds of use cases by banks here are presented. And don't forget that you have banks like JP Morgan that are just leading the way in terms of blockchain patents. You have all these institutions that really behind the scenes, they're doing a lot. They're creating their infrastructure. Maybe they're building software. A lot of them, of course, are building custodial solutions and that type of thing. These are just some other articles and some links here below. But you have a pretty good summary of the report here. We're going to link to where you can access the report or request it via email. That's a possibility as well. But there's your quick take. This is courtesy of theblockcrypto.com. Let us know your thoughts on this. I mean, I like I said, I think it's pretty balanced. It addresses the fact that there are still issues that we need to deal with and problems that need to be solved. But the outlook is very positive, and especially when you look at all of the parties, the big international players, the big organizations and investment firms that are really interested, that are kind of digging their feet and digging their heels in to brace themselves and to position themselves for what they feel is inevitably the future. Let me know if you guys disagree. Let me know what you think about this. Maybe if I missed something, you can obviously point it out in the comments below. What excites you most about this report, or maybe what is it that you're most skeptical of? I think that this is a pretty reasonable level of bias. Of course, Morgan Stanley wants to get in on the action here and wants to get in on everything related to cryptocurrency, but this is a pretty even-handed report. This is the kind of thing I like to see. Again, if you want to request the original report, we'll link to this. Morgan Stanley Research. You got to verify your Morgan Stanley. I suppose you submit an email. So if you do have access to Morgan Stanley research materials, you can enter your email here. They will verify it. That's not everybody, obviously, but there are a lot of good summaries of the report. We're going to link to a couple of them if possible possible in the description below. So let us know your thoughts. Of course, we're going to take a look, as I mentioned at the beginning of this video, at another report in another video. We'll save that for another time. But our friends over at CoinGecko have released their own 2018 Q3 cryptocurrency report. So we'll get another perspective, we'll get another take and another interpretation of how things are going and where things are going, perhaps more importantly. And with that, guys, it hasn't been a crazy news day, so we had a chance to delve into that piece in more detail. But as always, we're going to bring you the latest as it breaks. Be sure you're following Altcoin Buzz and Altcoin Buzz News. Follow us as well on Facebook, Instagram, and Telegram. Check out our last video here on the right, as well as our latest content on the website. If you choose to invest, members of the Altcoin Buzz Army, I wish you all the very best of luck. Be careful out there. Things, as always, are turbulent. And if you don't invest, that's cool too. We're still friends. Have a great Saturday and a great weekend. We're going to see you guys again soon in a new video. Take care.